Alright brothers, in this video we are going to be talking about what the rich know about real estate and how you can create massive wealth while investing in real estate. So some of the key tips and some of the information I want to start with is you have to understand with real estate there's many perks and advantages. So some of those are cash flow. So you're collecting rent every month if it's a commercial property. Again, we're going to be talking about commercial properties mainly because that's what Grant Cardone did. In our slide, you'll see Grant Cardone's first deal from his book, Investing in Real Estate, or How to Create Wealth Investing in Real Estate, Grant Cardone. So you have cash flow, appreciation, tax write-offs. So at the end of the year, you can use the property as a tax write-off. And you can also factor in depreciation if you have depreciation as well. So there's very many perks and benefits you can have when investing in real estate. Now in real estate, again, I'm not a financial advisor, but this is some statistics that I've gathered. Now in real estate, you have to understand that most people believe that if you own one rental property that has one door, you're safer than owning 12. However, there's something called occupancy. So with occupancy, it means, is it occupied? Now if you own 12 units, you're actually safer than owning one unit. And the reason behind that is because you can own those 12 units, and if 10 people live out of those 12 units and you have 2 that are vacant, so no one's living in them, you're still cash flow positive. So you're still able to pay down the debt of that property, you're able to collect that cash flow, get that appreciation, and use it as a tax write-off while getting a higher monthly income from that property. So it's very imperative that you understand cash flow is king, and doors and occupancy. So how big is the deal? The bigger the deal and the harder the deal is to get, normally the better that the property is going to be. Now with the property, it's very important that you find areas that have good location. If you watch Grant Cardone, you'll hear him say location, location, location. Location is one of the biggest things to keep in mind when you're looking for real estate. If the location is not good, chances are the real estate property will not do very good. Some areas that I like, me personally, Florida, Arizona, Texas, anywhere that's warm. If you look at New York, all these rural areas are in busy cities. They're all moving south. They're moving towards Florida, and all those other areas. Especially the California people are also going towards the Florida area. So there's that's the real estate market right now is booming. Especially those areas are just crazy. You have housing prices going through the roof. And one thing with real estate that's really important, especially with commercial real estate, is you can leverage. So if you look at Grant Cardone's first deal, he put $350,000 down, liquidity, cash on hand. So his own money, he put $350,000 down. Now with that, he bought $1.95 million worth of real estate. Now that's called leverage. He leveraged his $350,000 to buy $1.95 million worth of real estate. Now with that, he was able to acquire 48 units. So he had 48 doors that he was collecting cash flow from. He collected the appreciation, so the apartment complex that he owned went up in value. That's appreciation. Just like right now when they print all this money, your chances are your house is going up in value. Now if you're lucky, it will keep up with the amount of money that they printed. As we mentioned before, they've printed about 22.5% of every US dollar in the past 2 years, which is why savers are losers and the rich invest in assets or in an asset vehicle that can increase your return on investment and at minimum keep up with inflation with all the money that they're printing to keep the economy afloat. Okay, so again, Grant Cardone's first deal, he has those 48 units, and while he's holding them, he holds them for about 39 months. And within that, he's collecting the cash flow, he used leverage, and he's collecting appreciation as well as a tax write-off. Now, after 39 months, he sold the property, and he sold it for $5.2 million. Now, when he sold that property for $5.2 million, he then transfer the money into another real estate property. So that's something Grant Cardone does, is he'll sell these commercial properties and use tax code 1031, where you can move one asset property into another asset property, and as long as you put that money back into another property, you don't have to pay taxes. But while he's doing that, he can get more units, get more cash flow, because again, cash flow is king and location's imperative, and he can increase his return on investment overall. So that's what the rich do with real estate. That's why if you study entrepreneurs and many successful business owners, they own real estate for all the given perks and benefits that we mentioned. Hope you found massive value in this. Let's dive into the next video.